Good evening. This is the video newsletter for buysellshort.com for Thursday, January 28th. More of the same today. Still a negative bias on Wall Street. Traders are essentially either sitting on the sidelines or jumping in short, listening to all the bears that are being paraded around on TV. Big problem. Politics have come into this market in a big way, and when you've got the market waiting on what politicians are going to do, it is never a good thing. We had a pretty steep sell-off early in the day. We were down about 170 plus points. A lot of different reasons. Tech was a big leader. We had the SMH semiconductor stocks down pretty big when Qualcomm came out and disappointed last night. I mean, Qualcomm, they posted pretty good report. Guidance was decent, but again, guidance didn't blow the number out of the water, which is what the analysts were looking for and what the street was looking for, and down we came. Side note, after hours, we had Amazon, Microsoft come out, post absolutely blowout numbers. The initial reaction was they actually had Amazon trading at 116, down $6 on the day. They had Microsoft trading down as well. I mean, Amazon posted a 100% increase on EPS over last year, and the stock was down. We're actually looking at Amazon now, pushing 130 in after hours. Microsoft pushing $30 in after hours. So those early shorts who've been playing that game that has worked for the last couple of weeks of shorting any positive earnings reports are finally getting taught a lesson here in after hours, and hopefully that will bring us our bounce that we are way overdue for in the markets tomorrow. Looking at the daily chart, charts look great yesterday going into the close for a continued bounce today, but sellers showed up in force this morning, and the shorts jumped on board, and we have this ugly looking candle that we have. Trend lines have been violated on the Nasdaq. But I will caution you that we had the exact same thing happen back in November. We had an uptrend line in the Nasdaq or in the Dow in place from the March lows, got violated in November. We traded below the 50-day moving average, and then we jammed up for a new high. And also, looking at the daily chart, you can see since the March lows, we've essentially had a retrace once a month. But the last time we had that once a month retrace was back in November, 2 months ago. So, we've been really overdue for a retrace, and we're just getting it all at once right now. Indicators are, of course, deeply oversold right now. You can see Dow stochastics under 20. Every time we've seen that happen since our March lows, we've seen a decent bounce off those lows within a few days. So, things look pretty grim there right now, but just looking at what's happening to the shorts in Microsoft and especially in Amazon after hours should give us some joy going into tomorrow. Plus, Fridays have typically been pretty good days for the market over the last few months. We're deeply oversold. Bernanke just got reconfirmed by the Senate. And actually, just a comment on that really quick. Easily got reconfirmed. The Republicans are coming out now and saying that they always planned on voting for him, but they wanted to see the Democrats work for the vote. All I got to say on that is, what the hell? We had the market, this Bernanke reconfirmation thing had a lot to do with the uneasiness we've seen in the market over the last few days. And for these douchebags just to, sit back and let politics get in the way of things, it's not a surprise. But, come on, guys. Give me a break is all I got to say. But anyway, SMH, as I mentioned, looked great yesterday, got slapped down on Qualcomm's earnings report today. But ugly candles that we've seen today on the Dow and on the SMH and NASDAQ, they tend to see pretty sharp reversals really quickly. So, we've got a lot of people have turned very, very bearish over the last few days. We've had some trend lines break, but, trend lines can be broken, and then the charts can get repaired really, really quick. So while on one hand we're going to a high cash stance, we're ready to deploy that money really, really quick. So let's jump into some stock plays. Actually, let me look at the dollar here. US dollar, we actually broke above the 200-day moving average, pretty significant. If we do see a sustained rally, though, tomorrow or Monday, we'd be looking for the dollar to reverse course and possibly trade back down to the trend line, and that actually would be good for the market in the near term. But let's jump into some stock plays. Only new stock play we've had was EEE today. This is a stock we played a month ago at 35 cents. We got almost 100% gain on this one. It ran to 65 cents. Stock has just been beaten over the last couple of weeks. The tank that we saw in the last week was, of course, what is typical in small caps. Company looks for financing. They go talk to the financing sharks. These crooks let their friends know that they're working on a financing. They short the stock. Then the news comes out that the financing has been completed. Why this is legal is beyond me, but this is how the financing game works on small caps. And EEE all the way back down to its previous support level, set up very nicely for a big bounce here in the near term. We're looking for a bounce to the 50-day moving average at 37 cents, and then a snapback to the 20-day exponential moving average at 41 cents. This is a stock that every time it sells off, it makes a bounce attempt back to the 20-day moving average. So that's why we're looking for what looks to be a pretty easy 30% gain on this one, with stops at 27.8 cents. RSI nicely oversold. Stochastics nicely oversold. They've got cash in the coffers now from the financing that was done at 30 cents, and we should see a nice little bounce here as the financiers cover their shorts and look to sell their 30-cent shares nicely higher. ULU, this was one we jumped into yesterday and again today. Very strong support here at the 18-cent level. We're about to get a golden cross on this one. Again, biotechs have been the place to be. This one's come off nicely, and on any bounce in the market, we should see stocks like these bounce very, very nicely. And the chart is nicely oversold now and ready for a reflex bounce. PTN, this was a trade from a couple of days ago. Like most stocks in this market, traders are selling and asking questions later. Support is at 28 cents. We sort of tested it a little bit today, but this is a stock, if it breaks the 28-cent level, look to exit. We can always rebuy it when things turn around in the market, but for now, EEE really is a favorite of mine, at least for the next couple of days. And, we were talking about it in the chat room today that every once in a while it's pretty good to flush your accounts, but usually on an up day. So if we do get the market bounce that we're expecting tomorrow or Monday, we'll definitely look to be lightening up on some of these plays. A good rule of thumb is if you've been in a play for more than 3 weeks, unless it's a play that we're planning on staying in for more than 3 weeks, look to exit it. Worst case scenario, you can always rebuy it if interest comes back into the stock. But the whole idea, especially in times like this, is to stay pretty nimble, high cash, and be in the kind of mindset that lets you jump into beaten down plays like buying EEE today. We're looking good. This one was very strong today. Looks good going in tomorrow, especially if you've got a bounce. But if you're overloaded with a bunch of plays, it makes it very hard to pick up these bargain stocks when the market's acting crappy and you own a bunch of stocks and you're hurting. So that's another reason why it's always a good idea to, reevaluate the positions in your account, look to flush them out. Worst case scenario, we always buy them back again. That's it for the video tonight. We're going to wait for the market to respond before we jump into any more plays. But hopefully we should see that tomorrow. Again, Fridays have typically been pretty good. And one thing to really, really like is everyone and their mom is very, very bearish on this market right now. And that is a good thing. Nothing but bears being paraded on CNBC. You've got traders talking about shorts. We're starting to see traders in message boards and in chat rooms talking about, Dow 8,500 coming, Dow 9K coming. That is fantastic to see because either they're short and ready to get squeezed, or they're out of the market and waiting for the market to turn higher so they'll jump in. So the last few days have kind of sucked, just looking at the overall market, but there are little nuggets of movement and profit out there. Look what we got on CRXX, 30% gain in a day. So there are trades out there. Just a matter of staying high cash, staying nimble, and keeping your head on straight. And, these charts are deeply oversold right now, and we're just itching for a rebound. And looking at the daily chart, our 15-minute Dow chart, I suspect we're going to see a golden cross on this early next week. And upside target, as I mentioned in the room, when we get this bounce on the Dow, I'd be looking for a move up to that 10, 400, 500 area. That's it for the video. See you guys in the chat room tomorrow. Good night.